It's time for the Big Three. We've got 3 stocks, 3 charts, and 3 trades here. Kevin Green, take us through the charts. Here to take us through the picks today, Aquiles Larrea Jr., the founder and CEO of Larrea Wealth Management. Great to have you both with us today. Aquiles, let's start just with a big picture thought on the markets as we kick off what could be a huge week in the markets with the Fed decision coming down on Wednesday. We've got Mag 7 earnings. Lots of other big companies reporting this week. Should be an exciting one for us.
Yeah, a little bit subdued before the calm before the storm. But you're right. We have a lot of information coming out that the market is looking forward to. We've been seeing more a consolidation pattern in the market, not really huge swings to the upside. And we're going to continue to see that until we get more information. So the market is waiting to digest all this information, new earnings and the like, and it could be a boon to the positive side. We really believe that there's a lot of opportunity here, and if you get in at a lower price, plenty of ways for you to make money here, Marnie. So just hang in there and get some good quality names that we're going to talk about today.
All right, so if there's plenty of ways to make money here, I know everybody watching wants us just to get right to that. So your first potential possibility here to make some money, Constellation Energy. I was just looking at their charts. They've really fallen off the highs that we saw in October. Is that part of the reason that you like this one? Are they a little beaten down?
Yeah, we love stocks get beaten down. We're not a bottom feeder, but we are a value manager. And when it comes to stocks like this, anytime you can get a high quality utility being beaten up in the near term, we're all over it. We're quietly accumulating shares on this. We still think that there's a lot of opportunity. I mean, we talk about the AI and how are you going to power the AI? And this is one of the companies that has the capacity to do so. So you want to be involved with a company like this because your regular utility is not going to be able to handle the capacity needed to power the AI. Constellation is one of those few. We're looking at anywhere between 8 and 12% in the next 12 to 18 months. So more a turnaround target per se, but we think that there's a lot going on here that people don't know about. And we love the idea that we can pick this stock up cheaper and quietly accumulate it. We also think that Constellation is going to be a leader. We're not the only ones thinking this right now. So we know that there's a lot of big company interest in this particular utility right now. And we're using that momentum, hopefully going forward, to make some money for our clients.
And Kevin, we have a lot of conversations about energy and how important it is to the broad conversation of the data center build out plans. But in the last month, we've seen almost a 20% drop off for Constellation. So, walk us through the technicals here because they don't have their earnings until February 17th. So, only a headline catalyst in between now and then.
Yeah, you are seeing a pretty aggressive pullback. And even if we do see what Aquiles is talking about, potentially a 12% turnaround, you're just talking about going back to the 200-day moving average. It was trading at that level on the 15th of January here. So I think the stock right now is just filling some gaps to the downside. Obviously, it had a pretty strong run since the April lows, and we still have a couple of gaps to fill. To the downside, we are testing another one right now, sitting at around $200 and let's say $80 or so. To the downside, we also have another one that's sitting between around $245 and $257. That one could also be tested. And then I also have this line at the bottom here at 215. That's the biggest node outside of that volume point of control, which we already kind of broke through. You get a little bit concerned, though, Marley, that the stock was unable to hold that 200-day moving average or at least consolidate around that level before breaking down and really kind of knife through after that double topping pattern. And this is a name that likes to base out very aggressively like we've seen in the past and then re-rate to the upside a little bit higher here. So I get a little bit more concerned that we actually still have a little bit more downside for this name. But I think once it does get to around this 230-ish area, it probably will not stay there for long. We might see some buyers aggressively trying to step in here because of the existing business that Aquiles kind of talked about, but the new purchases and the new opportunities that are also available within their portfolio that a lot of traditional utility companies just do not have.
All right, right now, Constellation down on the day as well, down about 1% at 286.20 right now. As we move on to your next pick here, Achilles, it just simply couldn't be more different in terms of looking at the chart here. We're, of course, talking about the top performer of the year so far, one of the top performers of 25, SanDisk, up more than 100% just in 2026 in these 26 days of January that we've had. You still think there's room to move higher here?
I've run into other companies that we've done 600, 700% in a year. So this is not unlikely. SanDisk is the kind of company that nobody was thinking about for the longest period of time, and then all of a sudden investors started discovering that, hey, we need this technology in order for the future, and all of a sudden the stock started taking off. We believe that there's still, this is really for us a momentum play. We're not, it's risk capital. We're not putting more than a certain percentage, proprietary percentage into the stock right now. And we do that to protect our clients. But the momentum play is here. We can make double digits on this stock in a very short period of time. And that's really what we're looking to do. It's not something that we're going to hold for 12 to 18 months. We're looking really for this to give us a good return in 6 to 8 months right now. And if we can walk away with double digits, why not? We think that anytime you're going into risk capital, you have to be like the buyer beware, but there's still plenty of opportunity here. We don't think the story is over, and we most certainly believe that we can make some high quality money for our clients at this point.
All right, KG, and as we look at the charts here, what are you seeing for SanDisk?
Yeah, look, I mean, the stock has definitely gained some attraction to the upside, short squeeze taking place. You're now starting to talk about a stock that's trading at $470, $500. So a lot of retail traders might actually back away from it. That also can give it a little bit more traction to the upside until we get some fundamental news that maybe they have a split or something of that nature here. For the primary trend line to the upside, we're hitting that area of resistance. If you're kind of looking at those September lows and just going off of those highs, we are at a resistance zone. Last Friday, we had a little bit of a hanging candle. The day before that, a little bit more of a dragonfly doji, if you will, on a bearish front. So maybe a little bit of a pullback. What you get concerned about is if you look at that volume profile, there's no real volume up at these levels. So if we have any type of meaningful pullback, it could get fairly aggressive. I would look at the 287, let's say 287.5 level as your major next area of support. That was pretty much that basing formation that we had from November going out to around January before it actually broke out. And we are seeing RSI actually making a lower high. So this has been basically in a bear flag, or not a bear flag, but you're seeing a bearish divergence on the RSI for actually a considerable amount of time here. Obviously, you don't sell because of that signal. MACD looks like it's going to hinge. I get more concerned, Marley, that we actually see an aggressive pullback to the downside for SanDisk rather than another squeeze to the upside. But anything can happen in this market, and the technicals here I would actually also have to take with a grain of salt because this is trading very abnormally compared to past trends.
Yeah, certainly. And they have their earnings on Thursday, too, so another potential major mover there for SanDisk. Your last pick here, ASML Holding, also has earnings this week. Those will be on a Wednesday in the middle of the night around 1 a.m. Eastern. Is that a part of the play here, Achilles, or is this a longer-term hold for you?
This is a bit of both. This is both a momentum play, and we want to own this stock because of the quality. We're looking at a 10 to 14% return in an 18-month time frame. We think it could go higher, but really long-term on this could be a high-quality addition. So we're quietly accumulating the shares at this point. The thing to remember with a company like this, yes, it's had some recent, moves to the upside. There is still, putting a price on future technology and putting a price is a very tough game. Putting a valuation when it comes to this type of a company is not the easiest thing in the world. Although people would not agree with me, I think that there still is significant room for growth. Momentum is definitely in its favor right now, but doesn't mean we're not going to have some near-term resistance. I'm sure Kevin will agree with me on this, but doesn't mean we're not going to have that. But we think that using the weakness to get at and get in there and accumulate more shares, you will be rewarded in the future. So if you want to wait a little bit, but if not, there's plenty of opportunity to make money here.
All right, so plenty of opportunity to make money here. Are you seeing also in the technicals, Kevin, a potential to move to the upside? Because this is another really strong performer year to date, up 31%, 91% in the last 12 months.
Yeah, I think out of the three stocks that we talked about today, this actually has the best chart setup, not only because of the structured nature of how it's moving higher, but also the volume to actually backfill those type of flows as well. So we actually have a couple of things that are taking place. This is a stock that did not participate as much in this AI rally. Now you are starting to see that catch-up trade. We have this primary trend line from those April lows that's pretty much riding that 200-day moving average. So that would be your last line of defense, area of support. You can see the stock making higher highs, higher lows, but it's been very methodical. You have actually been able to digest a lot of this price action, and that's exactly what we saw pretty much from September to this recent breakout back in July. We were making higher highs, pretty much making higher lows, seeing a consolidation pattern, starting to ride those moving averages a little bit better, that 50-day moving average acting as an area of support, and now we actually have the breakout. What Aquiles is talking about is really that $1,550 level for that 10% move to the upside. We could get there with some pretty decent earnings here. You got to watch out for some of these gaps to the downside here. I'm not getting too concerned about them, but we do have two major gaps, and you do also have a bearish divergence where the RSI is making lower highs, MACD in a bullish formation. But once again, this stock has been able to digest the price action a lot better than a SanDisk, a lot better than CEG. So this is going to be an interesting one once those earnings kind of roll out here this week.
Yeah, and as far as their earnings predictions, expecting 20+% increases in earnings for ASML. So will be an interesting report. We'll get that one overnight on Wednesday, so we'll be covering that Wednesday morning. But want to thank you both for being with us for the Big Three today. Aquiles Larrea, Jr., founder and CEO of Larrea Wealth Management, and of course Kevin Green for being with us today to take us through the technicals.